Hey, what's up, everybody? My name is Justin, and I want to discuss a Philtown stock that looks like it is a good buying opportunity here today. It is a mid-cap stock that's trading around a $10 billion market cap, and this stock is Sprouts Farmers Market, ticker symbol SFM. Now, this is a grocery store chain. And before you turn off the video and say there can't be much growth there, that does not sound like an exciting company. You are completely wrong. This has been a fast growing company over the last several years, really since J.L. Sinclair came in and started managing the business several years ago. He has completely transformed Sprouts Farmers Market into a growth machine. Currently, they have around 440 stores in the United States in 24 different states. However, the long-term goal is that they're going to get up to about 1,200 stores nationwide. So that means they only have about a third of the stores in the United States that can get to their growth potential. This is a company that's been growing on the bottom line over 10% per year, top line over 10% per year, book value per share, return on equity. I mean, all these things have been over 10% per year over the last several years, and really has grown the stock from about $20 all the way up to $180. However, over the last year, the stock has fallen quite a bit. This year alone, it's down 20%, but it is down over 30% from its highs when it reached almost $180 just a few months ago. So I want to talk about this stock because I think it is potentially a really good buying opportunity right now. We're going to look at a 10-year financial history for Sprouts Farmers Market. Then we're going to get into what I think the fair value of the stock is. We're going to look at my discounted operating earnings model and calculate the fair value of stock. And I'll share what I think a good buy price might be for myself. You know, make your own conclusion and do valuations yourself and really understand the company. But I'll just share what my thoughts are and how I'm feeling about the stock overall. So first, let's get into a 10-year financial history. Take a look at what the company has done over the last several years. All right, so first up is the Rule 1 numbers. If you're a follower of Philtown like I am, you'll recognize what this is. The stock has grown from about a $4 billion market cap in 2016 all the way up to roughly a $10 billion market cap here today. However, it reached almost a $13 billion market cap at the end of 2024. Now, from a sales per share standpoint, the company has grown 14% per year over the last several years. In fact, over the last 10 years, which is absolutely incredible. Over the last 3 years, the company has grown 12% per year for revenue. Now, earnings per share has grown 18% per year. Free cash flow per share has grown 22%. Book value per share has grown 10%. The company has averaged 25% per year and 11% per year, respectively, for return on equity and return on invested capital over the last 10 years. So really impressive. Like I said before at the beginning of this video, this is a growth machine. This company has grown more than 10% on the top line, bottom line, book value per share has averaged over a 10% return on equity and return on invested capital, which I want to see in a company. That is one of the criteria that when I'm buying into a company, I want to see earnings power of at least 10% per year. I want to see that it can generate return on capital of at least 10% per year. Those are the type of companies that I want to buy into. And certainly Sprouts Farmers Market has done that over the last 10 years. Now let's take a look at some balance sheet metrics, get some cash flow metrics, and also kind of talk about a multiple and the outstanding shares of the business overall. So from a balance sheet and debt perspective, the company right now has no long-term debt at all on the balance sheet, which is absolutely fantastic. From a debt to equity ratio, it's 129%. Usually I don't like to see over 100%. However, it's grown because of the ASC 842 lease accounting standards that were put in place in 2019. So I am not worried about that at all. Now, the current ratio right now is at a 1, which is in line with what they've done historically. So all that looks pretty good. Next up, let's look at some P&L ratios. So the gross margin has grown from 29% in 2016 all the way up to 39% here today. So that is absolutely fantastic. That 10% growth from gross margin, which will flow right down to the bottom line. Now, their depreciation and amortization has shrunk from 63% in 2017 all the way down to 29% of revenue here today, which is fantastic. SG&A has grown from 23% up to roughly around 30% per year. But because gross margin has grown significantly, you can see operating margins have grown from 6% to 8%, which is fantastic. But EBITDA margin has grown as well from 8% to 9% here today. Now, from a multiple like a PE and also outstanding shares, this is what it looks like over the last 10 years. Currently, the company is trading at a 22 PE, and over the last 10 years, they have been around a 21 PE. But when Phil Town was buying the company back in roughly 2020, it was roughly a 9. So that PE multiples expanded about 2.5 times since when he first started buying it, but is trading roughly in norm of what it has been over the last 10 years. Now, shares outstanding for the company has shrank considerably over the last 10 years, going from 150 million shares 10 years ago to 97 million shares here today. So the company's been buying back roughly 4% of its shares per year over the last 10 years. So this has been a management team, specifically J.L. Sinclair, that really has been efficient with the money that the company has brought in. So it's taken earnings, buying back a lot of shares, but it's been really good about putting money back in the business and generating more income as well too. And we saw that from the return on invested capital. So this has really, I think, been an exciting company over the last several years, and it's really boring on the surface. A lot of people would not want to buy into a Sprouts Farmers Market because it's just kind of a boring company, boring stock overall, right? But investors that have bought into in the last several years really have seen some really good returns, especially if you held on to it the last 4 to 5 years, right? And you look at this company from a balance sheet perspective, cash flow perspective, P&L perspective, really an A all the way across the board. So now let's go take a look at what a fair value of the stock might be based on some assumptions that I'm going to make in this video. So here's my discounted operating earnings model. Basically what I'm trying to do here is forecast revenue over the next several years. So I'm saying about $8.8 billion that the company's going to do on the top line for revenue this year, right? They did about $7.7 billion last year. I think that's going to grow to $12.4 billion in 2029. So that's roughly a 10% CAGR on the top line per year. And we saw the company's been growing roughly 12% per year on the top line from a sales per share standpoint. Now, as far as operating margins go, the company last year did 6.5%. This year, they should fall around 7.6%. I think it's going to stabilize around 7.5% to 8%, but I'm going to be conservative and say 7.5% in this assumption. And so that means the company is going to grow operating income roughly 13% per year. However, the company, I also think, will continue to utilize their buybacks. And we saw that they've been buying back shares at 4% per year. I'm going to be conservative and say roughly 1%. So that gets me an operating income CAGR growth of 14% per year. Based on these assumptions, I think the stock price will be roughly $275 several years out into the future. So I've discounted back today to net present value. I think the intrinsic share price is $137. And as I do this video here today, the stock is trading at $104. Now, this might be the first time that you see my discounted operating earnings models, maybe the first time you've seen a stock being evaluated or calculated, right? If you don't know how to do that and you also like to support the channel, I do show you how to do that on my Patreon. I'll put a link down below. You also get access to my Discord channel. I also have Patreon exclusive posts on there as well too. So definitely go check that out if you're interested. But when I look at Sprouts Farmers Market and having a $137 fair value for the stock, and right now it's trading around $104, it does look like it's undervalued. Now, I want to buy the stock at a discount. I want to have a margin of safety because my assumptions might be wrong. I'm assuming a 10% growth on the top line. I'm assuming 7.5% operating margins. I'm assuming a 1% buyback of shares per year. Any of those assumptions could be wrong. I have no idea what the future is going to hold. So for me personally, I want a 30% margin of safety. So based on a $137 intrinsic value, I would put a buy price of roughly around $95 to $100 for the share. So that's pretty close to what it's trading at right now. Very, very close. In fact, if it starts getting below $100 a share, personally, I would be very, very interested to add to my personal portfolio. In fact, I may even start a very small position at the current price right now. But again, the farther it falls, the more it falls into my margin of safety. And certainly if it's a stock, if you're new at evaluating, you're new to stocks, a bigger margin of safety the better too. So if you want more like a 40% or even a 50%, which Phil Town likes, then you're talking around $70 to $80 of the a share price, right? And so it needs to fall even further to fall into that margin of safety overall. But I like Sprouts Farmers Market. I shop there personally, and wife shops there. I think it's a fantastic company. They're really unique too in the space because they actually get their produce, and that's what they're really known for, is getting their produce from local markets, right? So I live in Colorado, so if I go to the Sprouts Farmers Market in my state, they typically source their fruits, their vegetables from nearby farms. So a lot of the corn, if I go in there, buy is from a farm in Colorado, which I think is pretty cool. And they have like 3 different distribution centers. All the stores are within like a 250 miles of a distribution center. So they've done a really great job over the years on being able to cut their costs by getting their product from local markets, but also having distribution centers that are close to their stores as well. And I think that's going to continue to happen as they grow. Again, they're only in 24 different states, so they can double the amount of states in the United States still. They can still almost triple the amount of stores in order to get saturated in the United States. So interesting company. I think that they have a fabulous management team as well. But I'd be interested from you guys. I mean, what do you think about Sprouts Farmers Market? Do you own the stock? Are you interested? What do you think of my valuation here today? Would love to hear from you guys in the comment section. Again, check out my Patreon below if you want to support the channel. Thank you guys so much for watching. Really appreciate it. Catch you later. Take care and God bless.